Enable. GIC Re presents CNBC-TV18 Mutual Fund Awards 2018.
Good evening, ladies and gentlemen, and welcome to the CNBC-TV18 Mutual Fund Awards presented by GIC Re. The last few years have actually been a celebration of the mutual fund industry, and the monthly inflows are actually testimony to the faith that investors have been putting in your hands, the very able and dynamic fund managers who are here with us today, who have managed to scale this industry into a 25 lakh crore rupee giant. Well, these days gone by have thrown up a lot of fresh debates, a lot of which we're going to tackle here tonight. Let's get the ball rolling, and let me invite on stage Lata Venkatesh, Executive Editor at CNBC TV18, for a welcome address.
I welcome all of you to what I promise is going to be both an entertaining and an enlightening evening. Just a word on how this idea germinated. We often speak about, 8 lakh crore in 2008, 10 lakh crore in 2014, 25 lakh crore in 2018, much of it equity flows. We forget that debt has done equally well. Outstanding debt issued in 2013, 5 years ago, 14 lakh crore. Today, outstanding debt, 28 lakh crore. CPs issued in the same 5 years has trebled, whereas debt has only doubled. So debt mutual funds have become a source of funds to ensure that the Indian growth story remains robust despite the problems in the banking sector. We find that debt mutual funds have grown perhaps too fast. How this industry will grow forward and how it will meet its near-term and its long-term challenges. Thank you very much, and I wish you all a very happy, entertaining and enlightening evening.
Please put your hands together for our chief guest for the evening, the former chairman of SEBI, Mr. UK Sinha.
I want to compliment the industry for 25 years of their existence and growth. And while the industry has a lot to compliment itself for the great work it has done, it should also be taken note of that there were other factors as well which have contributed to this. For example, the global liquidity which has been abundant, that has led to interest rate flows and interest rate going down, and that has led to more flows into the Indian market and the market doing well. The lower interest rate in the Indian economy has led to fixed deposit rates being very low. So people find now that compared to the bank fixed deposits, mutual fund is perhaps a better option. This whole development has also been helped by regulatory developments. If the changes in 2012 in the policy changes had not happened, perhaps the industry would not have been able to grow this way. In my view, this is also a celebration of 25 years of achievement, but it is also a time to pause. Let me come to debt schemes, and some mention was rightly made about some recent developments which have taken place in the last 2 weeks or so. But keeping that aside, look at the growth of the industry in the debt side, and look at the concentration in the growth. 50% of the investments in the debt schemes are by corporates. Mutual fund exposure to CPs has grown 3 times between 2016 and 18. In 2 years, it has grown 3 times. I'd also like to say that Indian mutual fund industry, the costs and fees are one of the highest. I remember, and I must say that with some regret, that SEBI trusted the industry and the industry body that there will be some regulations which will be self-regulation on costs and fees. From the investor's point of view, there is a strong pushback that fees have to be reduced. They are pushing towards it. There is a pushback from the industry, but the investors are pushing that they has to be reduced. And in countries after countries, large investors are pressing for it. Please take it in the stride that what I'm saying is not as a criticism, but it is something for somebody who has been involved with the industry in multiple capacities. I thank CNBC TV18 for inviting me, and I wish the industry all the best.
I'd request her to stay on, and also like to call Lata back on stage for a quick chat with Mr. Sinha.
Well, it appears that Mr. UK Sinha has not retired from being a regulator. Every inch a regulator. A round of applause for what I think was an extremely enlightening speech, sir. Well, actually, it was very tempting to begin with the fee issue that you touched on, because you were seen as the most liberal regulator in that respect. But I'm not starting there, because today the fiery issue is something else. It is the illiquidity in the debt market. So let me start from there. What's the solution?
In the market, the most important thing is to give a signal that the trust in the market can be restored, or the trust in the market is not eroded. So the first attempt, or the deeper attempt, has to be to continue to restore the faith in the market. Because if there is a faith in the market, some of the processes can be handled, some of the problems can be handled. And here I would like to say that the Reserve Bank of India, the Government of India, and SEBI all must work together. Not only they should work together, they should also consciously give the impression to the outside world that they are on top of the situation, they are going to solve it together. That itself will be a big message.
Issue that is perhaps most bothering the industry at this point in time, and which was the heart of your speech, the total expense ratio. Mr. Sinha, in your time, you were conscious that the industry had to grow. At that time, of course, it was stuck between 8 lakh crore and 10 lakh crore, and you were very conscious that the industry has to grow.
Not only that, the AUM was going down year after year. For 2 years, 2010-11 and 11-12, there was a decline. The industry was in a very difficult situation after 2009.
And you came with some creative solutions.
Yes.
That they can be excused for setting aside a little amount of money as an education fund. As well, they would get more allowance for more expenses if they went to B15 cities.
Yes.
Those were the two liberal policies that came from you. Now the industry's argument clearly is that it's only if it make profits will it reinvest. Is it a good idea to go after their profits? I mean, RBI doesn't go after banks which make profits. So is SEBI right in going after their profits, or should it do something else to ensure that the expense is reinvested?
I think the regulations in India are quite detailed. And since I have worked on the other side, I also know that there is always an attempt to follow the regulations in letter and not in actual spirit. And so many facilities have been given, so many dispensations have been given. I think industry should start thinking in terms of following it in letter and spirit, because it is in their own interest.
Once a regulator, always a regulator. No. That's how it looks. Well, ladies and gentlemen, another round of applause for Mr. Sinha.
While the penetration of mutual funds is on the rise, but the industry still has miles to go before it can catch on to the mammoth that's the banking industry and the behemoth that is insurance. And here's someone who has spent 30 interesting years at the helm of the insurance sector. Ladies and gentlemen, please welcome the Chairman and Managing Director of General Insurance Company, Mrs. Alice G. Vaidya.
It is heartening to come together for this event where we celebrate the success of this industry. The story of mutual funds in India have almost coincided with Indian story of liberalization. Chronologically, we are into the second generation of economic reforms, a generation coinciding with about 25 years. Mutual fund industry, of course, has raised the game by creating plethora of products and categories, offering sector-based investment opportunities and index-based fund deployment, targeting demographically diverse groups and offering structure through SIPs and STPs. I'm quite confident the industry will make the most of it and leverage this opportunity for the greater good of the investors, the economy, the society, and the country. Thank you.
GIC Re presents CNBC-TV18 Mutual Fund Awards 2018.
It's now time to actually hear out from the very stalwarts of the mutual fund industry. So let me please invite on stage Mr. A. Balasubramaniam, CEO Aditya Birla Sun Life AMC, Mr. Ramdev Agarwal, Joint MD Motilal Oswal, Mr. Sunil Subramaniam, CEO Sundaram AMC, and Mr. Nilesh Shah, Managing Director Kotak Mahindra AMC. Lata is going to be moderating this session.
Well, we have the stalwarts of the industry over here. Let me start with that happy question. What's your sense, Bala? 25 years it took to get to 25 trillion. By when will you get the next 25?
Change is a constant. At the same time, growth is also constant for our industry. Okay. So under-penetration that remains in the industry is continue to give opportunity for the industry actually gone for bigger number, which I think is going to be the case as we move forward. I'm quite sure
you wouldn't have said this if we were doing this discussion in 2011, that growth is a constant. It didn't look that way. But very quickly, Nilesh, when do you think next 25?
We should not be bothering about AUM. We should be bothering about investor confidence, investor satisfaction, investment performance. And that's where we would like to be 100%. We aren't there today, but we would like to be 100% there. And if I get mind share of a person through satisfactory service, hopefully the pocket share will follow. Okay. So let's focus about investor return, investor confidence, investor satisfaction. We are probably there at 70-80%, and hopefully over next few years we'll be there at...
What's your sense, Ramdev, next 25?
So, as you know, we manage only equities. So, the equity number is much smaller. That's about 9.5 lakh crores. There, I think the doubling can happen much faster, maybe in 4 years. I would think 18, 22, I mean, if the economy grows at about 9%, maybe 22. If it grows at 7%, then maybe 23. Okay. So 4-5 years, good period for equity AUM.
So you double equity mutual funds, equity AUM in 5 years.
Yeah.
Okay. Well, that's an encouraging answer. Sunil, I'm not going to ask you that easy question. I'm going to ask you the tough question. Ramdev has deliberately said that equity mutual funds will double. The problem is really with debt. So I'm going to straight away start over there, Sunil. Is the industry guilty of underinvesting in debt research, in credit research? Are you all simply relying on Ashu Suyash or on the credit rating agencies and not doing your own homework?
If you say that, you should rely on your own research. Now, as far as I know, every fund house has a credit research team. Every single fund house which has, right? So they do their own research. But the foundation of this, the start of this, is the rating of the credit rating agencies. So nobody says, ignore the credit rating agencies, I'll ab initio start. At the same time, everybody applies their thing. The reason I'm saying you take IL&FS, half the industry has no exposure to IL&FS, half has it. Why? Despite it being AAA, right? So I think the industry does apply its balance to the credit rating agencies' result. So I would say, like I said, it's yes and no. Whether it's adequate or not, the markets will tell you.
Okay, now I'm going to give you an easy question for the problem that the debt market is now facing. Who is to blame?
Are you ready to take a tough answer? I will blame the banking system because the mutual fund industry stepped in. Why did this commercial papers triple? There were no banks willing, the PSU banks had shut down lending.
Okay.
Private sector banks were lending only...
Banks take the problem. Okay.
Yeah, because
Bala, who takes the problem?
I think this kind of thing suddenly all comes actually. And what we have seen in the last three weeks, I think there are macro variables globally is changing. I think we are forgetting that the way I think oil prices moved up, the way the currency has behaved, the way I think liquidity situation has changed, and the way the one failure of one company, I think we have seen historically commercial paper rated P1 plus never defaulted in the history. And how can I actually say now suddenly one P1 plus paper got defaulted in the systems? Therefore, it's very difficult to say then whom do you blame. As he mentioned at the end of the day, I think the banking industry is divided into two groups. One is the public sector banks who are now being declared as a PCA bank.
Got the banking argument. And I don't want too much of bank bashing over here. you want to take whom will you blame for the debt?
The sudden downgrade by rating agencies. So clearly...
That is the word I was expecting everybody to say.
Yeah, so
just because the lady is here, I think you are not saying that word.
No, whatever has happened, we have to take cognizance of that. And clearly, that shocking moment that now probably the entire credit industry, including banking or mutual fund and everybody, they have to do their own rating. Because if the AAA doesn't look like AAA, it doesn't trade like AAA, then what is the meaning of AAA? That God status you give, and if the market doesn't believe, then it's a crisis moment. So right now it's just 3 days. Maybe we are exaggerating the whole thing. In 3, 4, 5 days, 10 days, all the regulators, RBI, they will prevail upon and liquidity will come back.
You have some guests with you.
Just a response on how rating agencies are looking at the entire situation.
So thank you for setting the record right, because this is not a company CRISIL has rated. And not 1 year or 2 years. For 20 years, we did not rate this company. And therefore, there is a key message in this for all market participants to take and analyze and put into their decision-making process. You not only should look at what the rating outcome is, the rationale, what goes into it, what are the credit default statistics and transition studies saying, and how do you make the selection is an equal decision.
And that's exactly what I was asking for, that there is a fiduciary responsibility and it cannot be outsourced.
GIC Re presents CNBC-TV18 Mutual Fund Awards 2018.
The Nifty Giveaway, about 6-7% from the highs. Do you think this could be taken a little badly by the investors? We've seen very good month after month, month-wise inflows into equity mutual funds. Will that face a setback?
See, this is happening after 4 years of relentless, massive flow. Record-setting flows till about March 18. In fact, till about first quarter also was very good. So in last 2-3 months, we have seen some slowdown. But 5-6% correction is, actually it is very low correction. If you, the corrections in the portfolios are much deeper. Clearly, even in multi-cap funds and all, the corrections are a little deeper. And and we are not seeing any kind of concern from the people. They're not dejected or anything like that. But of course, they're confused whether they should be putting money right now or they should be doing it a little later. But I don't see any kind of fear in the marketplace. Okay. Typically, in this kind of time, the fear psychosis comes and there is a queue of redemptions or anything like that. I don't see that kind of scene right now.
Okay. Well, Nilesh, would you have any numbers for SIP? Is that culture here to stay?
There are two sets of investors in SIP. One which has gone through the ups and downs in the market. They have suffered negative return in SIP. They have suffered bear market in equity. And by experience or by the advice of the distributor, he has gone through that period, and now when SIP returns are negative for last 12 months, they are still holding on and they are still investing. There has been explosive growth in Indian mutual fund on the equity side in last couple of years. And we have received many new investors, many investors in semi-urban and rural areas. And for them, this is probably the first time experience. And here, despite our attempt in reaching out to them and passing the message that this is part and parcel of equity market, we are seeing some shutdowns, some redemptions. We have a responsibility to them to ensure that they don't redeem at the worst of the time. They remain invested so that they can have a pleasant experience. With distributor community, we are all working on it. Let's hope that we will be successful.
Okay. Distributor, I was waiting for that word to be spoken. Sunil, how much will this trail impact the mutual fund industry?
There are two categories of distributors broadly in the industry, right? There is a large national distributor bank who has an army of salespeople where the upfront commissions were being used to pay them, and the trail commission which followed the upfront commission was the banks or the national distributors' income. The other set of distributors is the independent financial advisors, and over the last 5 years, the trends we have seen is that 70 to 80% of them have shifted into a trail model without even the regulatory thing, okay? So this is because I think the relationship, the nature of the business model, right? In a bank or this thing, they are not sure of the continuity of the salesperson in terms of this. So that person is looking at that year's bonus. So the upfront was used to do that. So I see that there will be an impact in the banking national distributor on this withdrawal of upfront and trade to some time, and there will be a shift towards PMS, AIFs, ULIPs, right? But I think over a period of time, they will come back to that person. But in the IFA channel, they are very resilient. They rely on their relationship with the customer. They recognize that alignment of their earnings with the customer. If the NAV goes up, their earnings goes up. NAV goes down, their earnings go down. I think there the maturity of the IFAs has improved tremendously, and I actually don't see that this move is going to affect them in any significant way.
Bala, what are your thoughts? There are 2 or 3 things that are affecting this wonderful story of equity mutual funds that we have come to enjoy over the last 24 months or 36 months. There is the global macro, there is the distributor incomes, and there is the total expense ratio also, which is curbed. Can all this together kind of spoil the party for the next few months?
Yeah, definitely any reduction in expenses, it's obvious to assume is going to hit somebody. I think it's going to take away the profit which all of us have been generating, including the distribution community, and that definitely will have an impact. I think that's a new way of living and the new normal. I think one has to accept that fact that the regulation, as Mr. Sinha mentioned, that's going to be the trend that we can expect. And we have seen it in the global market also, that ETF today has become one of the biggest size in the global market. These fund houses which are in the largest size maybe 10 years back, today they are no more the largest in size. But ETF as a category has taken full charge. Therefore, I think that's the trend that we'll have to see it as a coming. And second is, it will of course definitely impact in the short term. One is of course the expense reductions. Definitely is put people on fear that how much of income will go down. And nobody will like actually the income level to go down. This is one, the uncertainty will create. And second is, markets have been volatile. And third is, as Ramdev mentioned, that most of the money managers have been finding it difficult to beat the benchmark, especially in the last 1 month, last 6 months. Therefore, there also somewhere down the line will come and actually hit the minds of investors as to what should I choose between index funds and actively managed funds. These are the question marks which will come as we move forward. So therefore, I think we now live with some kind of uncertainty. One good thing that the industry has done the last 6 years, not only growing the industry size of equity to a 10 lakh crore, they have also created the industry is more sustainable by focusing on building SIP. Today, SIP is actually considered as one of asset class within the mutual fund space. That's, I think, kind of recall that has come. Therefore, as long as the investors stick to their SIP as a mode of investing, nobody need to worry about the short-term volatility.
But Surabhi,
we haven't heard from Manish at all. So Manish, you've heard a whole plethora of issues out here. I think a response specifically on some of the points that are being raised with the model itself undergoing a change, the commissions, the distribution setup. What do you expect for the industry over the next couple of months?
So I guess it's all about volumes now. I think periodically we will see dip in commission rates. But I think the sheer under-penetration of the product, from a 5-10 year perspective, I still think it's a great industry to be in. Because, I mean, you have the usual statistics that only 3% of households still have equity exposure. So I think it's going to become a volume game rather than a margin game.
So some thoughts. We've had, of course, a bevy of issues between equity and debt. But just a quick synopsis.
I would say only one thing. There's been a lot of discussion around mutual fund costs, mutual fund TERs. I think the topic has been talked about honestly to death, as Manish rightly said. I think the reason we have so many conclaves is the size the mutual fund industry has acquired and what it's done over the last 25 years and the size that it will acquire over the next 25 years. So if now the discussion on cost is settled, then we can go forth and discuss volume growth and what we can do to generate better alpha, reach more customers, sell products correctly. I think that's a better discussion to have.
Actually address this question to the panel as well. Sir, I take your point that banks is where the bulk of the change has to happen with respect to moving to an all-trail model. But isn't it right that banks do comprise almost 40% of the distribution pipeline itself? So we're talking about major disruption. How many months and when do we expect things to settle?
See, what is key here, and I see some national distributors have moved that way, is while the commission from the manufacturer will be on a trail basis, nothing prevents the bank from taking a call and front-ending that commission on its own balance sheet. And I know a couple of national distributors who take a trail model from the manufacturer, but in turn they take a business risk on their employee and upfront it. So I think banks are smart enough to figure their way, and I don't see, except for a short-term knee-jerk reaction for a few months till they realign, I see that the volume growth of this industry. And just to bear in mind where we are still in a single-digit equity penetration in our country. And the advanced countries are at mid-30%. So I'm saying the volume growth that we can see from this is phenomenal.
But I can't wind up this discussion without asking Ramdev, where will the Nifty be? Next September?
I don't know where the Nifty will be. Next September.
No, at 12 months, give us a target. At least are we higher? Because we have many events lined up in between now and next September. There are series of elections. And there is, of course, the near-term problem to tide over. The global scene is giving us enough clouds. So next September, will we be celebrating much more than 25 trillion and much higher than 11,050 on the Nifty?
It should be from current levels. I would expect about 10 to 15% pickup in the Nifty from on a 12 months basis.
Oh, that's an extremely optimistic note to end this discussion. Does the Bangala fund manager want to add to it?
Lata, you made a cardinal mistake. You didn't ask the year. So Nifty will be 1 lakh in September. Just don't ask the year.
All right. On that note, ladies and gentlemen, a big round of applause for our panelists.
GIC Re presents CNBC-TV18 Mutual Fund Awards 2018.
Well, ladies and gentlemen, finally it's time to announce the first set of awards. So get ready to give away the first set. Let me invite back on stage Mr. UK Sinha and also Mr. Ajay Garg, CEO and Director at SMC Global, as well as Lata. All right, the first award category to be given out this evening is the Best Dynamic Bond.
In the category Dynamic Bond, the nominations are Franklin India Dynamic Accrual, SBI Dynamic Bond, IDFC Dynamic Bond, and the winner is IDFC Dynamic Bond.
So congratulations to Team IDFC. May we please have them on stage to receive the award. A big round of applause, ladies and gentlemen. The second set of awards that's going to be presented is the Best Medium Duration Debt Fund.
In the category Medium Duration, the nominations are IDFC Bond Medium Term Plan, DHFL Pramerica Medium Term, Franklin India Income Opportunities, and the winner is IDFC Bond Medium Term Plan.
Congratulations once again. And now for our next category this evening, the Best Corporate Bond Fund.
In the category Corporate, the nominations are IDFC Corporate Bond, Kotak Corporate Bond, HDFC Corporate Bond, and the winner is Kotak Corporate Bond.
So congratulations, guys. Ajay, thanks very much for doing the honors. Let me invite on stage now Mr. Anurag Bansal of SMC Global Securities to please give away the next few set of awards. All right, and this next award category is going to have everybody who'd want to pay attention. It's the Best Credit Risk Fund for performance in the past.
In the category Credit Risk, the nominations are Kotak Credit Risk, Franklin India Credit Risk, UTI Credit Risk, and the winner is UTI Credit Risk.
We have the team from UTI. Please come and receive the award. Congratulations. Up next, the Best Short Duration Debt Fund.
In the category Short Duration, the nominations are HDFC Short-Term Debt, L&T Short-Term Bond, Sundaram Short-Term Debt, and the winner is L&T Short-Term Bond.
All right, congratulations to Team L&T. Please do come on stage. All right, the next award category is the Best Low Duration Debt Fund.
In the category Low Duration, the nominations are Tata Treasury Advantage, Sundaram Low Duration, SBI Magnum Low Duration, and the winner is Tata Treasury Advantage.
Congratulations. Let me call on stage Ms. Ashu Suyash, the MD and CEO of CRISIL. The next scheme to be awarded tonight is the Best Ultra Short Duration Debt Fund.
In the category Ultra Short Duration, the nominations are Motilal Oswal Ultra Short Term, DSP Ultra Short, L&T Ultra Short Term, and the winner is L&T Ultra Short Term.
So congratulations to the L&T team for this win. Up next, the category which will be awarded is the Best Liquid Fund.
In the category Liquid, the nominations are India Bulls Liquid, L&T Liquid, Baroda Liquid, and the winner is L&T Liquid.
Okay, so you're making that trip again. Congratulations to the entire team. The award for the next category is for the Best Arbitrage Fund.
In the category Arbitrage, the nominations are Reliance Arbitrage Fund, Kotak Equity Arbitrage Fund, Edelweiss Arbitrage Fund, and the winner is Kotak Equity Arbitrage Fund.
Congratulations. Move on, we have now the nominees for the Best Aggressive Hybrid Equity Fund.
In the category Aggressive Hybrid, the nominations are Canara Robeco Equity Hybrid, HDFC Hybrid Equity, ICICI Prudential Equity and Debt, and the winner is Canara Robeco Equity Hybrid.
Congratulations, sirs. We have the category to be awarded now is the Best Multi-Cap Equity Fund.
In the category Multi-Cap, the nominations are Motilal Oswal Multi-Cap 35, Principal Multi-Cap Growth, Mirae Asset India Equity, and the winner is Principal Multi-Cap Growth.
And now here's a look at the nominees for the Best ETF.
In the category ETF, the nominations are Reliance ETF Nifty BEES, ICICI Prudential Nifty ETF, Kotak Nifty ETF, and the winner is Kotak Nifty ETF.
Let me also invite Mrs. Alice Vedin. Next category to be awarded this evening is the Best Equity-Focused Fund. Here's a look at the nominees.
In the category Focused, the nominations are Axis Focused 25, Sundaram Select Focus, IDFC Focused Equity, And the winner is IDFC Focused Equity.
Now for a look at the nominees and the winner for the best value or contra equity fund.
In the category Value Contra, the nominations are IDFC Sterling Value, Tata Equity PE, Invesco India Contra, and the winner is Tata Equity PE.
And now let's take a look at the nominees and the winner for the best ELSS fund.
In the category ELSS, the nominations are Aditya Birla Sun Life Tax Relief 96, IDFC Tax Advantage, L&T Tax Advantage, and the winner is IDFC Tax Advantage.
Let's now take a look at the nominees and the winner for the best small cap equity fund.
In the category Small Cap, the nominations are Reliance Small Cap, HDFC Small Cap, L&T Emerging Businesses, and the winner is L&T Emerging Businesses.
And here's a look at the nominees and the winner for the best mid-cap equity fund.
In the category Mid-Cap, the nominations are HDFC Mid-Cap Opportunities, L&T Mid-Cap, Kotak Emerging Equity, and the winner is L&T Mid-Cap.
And now for a look at the nominees and the winner for the best large cap equity fund.
In the category Large Cap, the nominations are Reliance Large Cap, ICICI Prudential Blue Chip, HSBC Large Cap Equity, and the winner is Reliance Large Cap.
It's time now for the last three awards. So ladies and gentlemen, here's a look at the Debt Fund House of the Year.
In the category Debt Fund House of the Year, the nominations are Kotak Mahindra Mutual Fund, IDFC Mutual Fund, L&T Mutual Fund, DSP Mutual Fund, UTI Mutual Fund. The runner-up is IDFC Mutual Fund.
Congratulations, Team IDFC. And now let's hear out the winner for the Debt Fund House of the Year.
And the winner is Kotak Mahindra Mutual Fund.
Congratulations. And now here's a look at the nominees for the Equity Fund House of the Year.
In the category Equity Fund House of the Year, the nominations are HDFC Mutual Fund, L&T Mutual Fund, Reliance Mutual Fund, Aditya Birla Sun Life Mutual Fund, Kotak Mahindra Mutual Fund. The runner-up is Aditya Birla Sun Life Mutual Fund.
Congratulations, sir. And now let's find out who the winner is of the Equity Mutual
the winner
Fund
is L&T Mutual Fund.
Oh, there are multiple winners tonight, so big congratulations to the entire team at L&T Mutual Fund. And now this is what it boils down to, the real big one, the Mutual Fund House of the Year.
In the category Mutual Fund House of the Year, the nominations are Reliance Mutual Fund, Kotak Mahindra Mutual Fund, HDFC Mutual Fund, L&T Mutual Fund, IDFC Mutual Fund. The runner-up is L&T Mutual Fund.
Yeah, congratulations, they're big winners tonight. I hope you have a good evening. And this is the final award, the Mutual Fund House of the Year. And here it is.
And the winner is Kotak Mahindra Mutual Fund.
Ladies and gentlemen, this one deserves a standing ovation. They're the big winner tonight. Kotak Mutual Fund, the Mutual Fund House of the Year.
GIC Re presents CNBC-TV18 Mutual Fund Awards 2018. Focus, ideate, innovate, enable.